Ever wish you had like a crystal ball? You know, one that could tell you which stocks were going to totally skyrocket?
Uh-huh.
Me too. I
Right.
mean, who wouldn't want that? But sadly, no crystal ball today.
Right.
But what we can do is take a deep dive into Netflix, see if it still has that, that potential to be a really lucrative investment. We're going to be looking at it from a value investor's perspective.
Okay.
So think Warren Buffett. Really analyze if this streaming giant is a buy. Oh, and before we get too far, don't forget to hit that subscribe button. That way you won't miss out on future deep dives.
Exactly.
Okay, so let's get started. We've got a ton of research reports and articles here, all about Netflix.
Wow.
Yeah, we're talking subscriber numbers, revenue, even a SWOT analysis.
Nice.
Ready to dive in.
Absolutely. Let's start by understanding like the core of their business.
Okay.
They're undeniably the leader in streaming entertainment. I mean, just look at the numbers.
Yeah.
282.7 million subscribers globally. That's enormous.
That's insane. It's like what the entire population of the U.S., Canada, A&D, Mexico, all glued to Netflix.
It really is. It's a massive audience.
And you know what I really appreciate? The ad-free streaming.
Oh, yeah, that's a big one.
It's a huge perk. I mean, I hate interruptions.
Right.
And their original shows, don't even get me started. Squid Game practically broke the internet.
Oh, absolutely. They've had some massive hits.
And let's not forget their personalized recommendations. Like sometimes it's scary accurate.
Yeah, the algorithm's pretty good.
It's like they know me better than I know myself.
Right. But it's a powerful combination for sure. But we got to remember the streaming landscape is getting really competitive these days.
Oh, for sure.
You got Amazon Prime, Disney Plus, HBO Max. They all want a piece of the pie.
So it's like a streaming war out there.
You could say that.
So the big question is, can Netflix hold on to its crown?
Yeah, that's the million-dollar question.
Okay, so how does Netflix actually make money?
Yeah.
It can't just be subscriptions, right?
Well, subscriptions are their main source of income for sure.
Okay.
But their tiered pricing model helps. Basic, standard, premium, even that new ad-supported plan.
Right.
That way they can reach a wider audience, of people with different budgets and viewing habits.
It's smart. Makes it accessible to more people.
Exactly. But they've got other tricks up their sleeve, too. Did you know they license their own shows?
Really?
Yeah, to other platforms in certain regions.
I had no idea.
It's a clever way to reach an even wider audience. And, of course, boost that revenue.
That's brilliant. So they're constantly adapting and innovating to stay ahead of the game.
Exactly.
Speaking of being ahead of the game, who are the masterminds behind this streaming empire?
That would be Reed Hastings and Ted Sarandos, the co-CEOs of Netflix.
Ah, the dynamic duo.
They've led the company through some pretty turbulent times, too. Remember that subscriber dip back in 2022?
Yeah, I remember that. First time they'd lost subscribers in over a decade. Must have been a huge wake-up call.
It was a major turning point for sure.
How did they turn things around?
Well, they really tackled password sharing, which was a big drain on revenue.
Yeah.
And they introduced that ad-supported tier to attract more budget-conscious viewers.
Smart move.
And of course, they kept investing heavily in creating must-watch content.
So basically doubled down on what they do best.
Exactly. And it seems to be working. Subscriber growth is back on track.
That's good to hear. Sounds like they're pretty agile and adaptable.
Yeah.
Which is key in such a fast-paced industry.
Oh, absolutely. They have to be to stay ahead of the curve.
Okay, so what about their management style? Do they rule with an iron fist?
Haha. Actually, no, quite the opposite. Netflix is known for its hands-off approach to management.
Really?
Yeah, they encourage their employees to take ownership and make independent decisions. It's all about freedom and responsibility.
That's fascinating. It's pretty unique in the corporate world.
It is.
Makes you wonder if that's part of the reason they're so innovative.
It's possible. They're encouraging their employees to think outside the box and take risks.
It's a calculated risk, but it seems to be paying off.
It does. And their focus on long-term growth over quick profits is another key factor in their success.
Okay, so playing the long game.
Exactly. Think long-term value creation, not just chasing short-term gains. Classic Warren Buffett.
Makes sense. Building a sustainable business. Okay, so we've looked at their business model, leadership. But what about their financial health? Are they really as strong as they seem?
Well, on the surface, things look pretty good. They're boasting a 47.89% gross profit margin, and their free cash flow is a whopping $7.1 billion. But, as always, the devil's in the details.
Okay, so let's get into those details. What are the key metrics we should be looking at?
We're talking revenue growth, operating margin, and that intriguing negative working capital situation.
Wait, negative working capital. That doesn't sound good. Should we be worried?
Not necessarily. It's actually pretty common in subscription-based businesses like Netflix.
Oh,
Think about it. Subscribers pay up front for a month or even a year of service.
right.
That means Netflix has all this cash on hand from those subscriptions, but they haven't actually delivered the service yet. So that cash influx shows up as a liability on their balance sheet, which technically makes their working capital negative.
So it's more of an accounting quirk than a sign of trouble.
Exactly. It actually suggests they're managing their cash flow efficiently. They can use that cash to invest in new content, expand into new markets, basically fuel their growth.
That makes sense. So overall, is Netflix financially sound? Are they in a good position to weather any potential storms?
They've consistently shown revenue growth, their profit margins are expanding, and they're generating strong free cash flow. From a purely financial perspective, they seem to be in a healthy position. But of course, there are always challenges and risks to consider.
All right, well, this is all super insightful, but I'm really curious about who holds the reins of power behind the scenes. Let's shift gears and talk about Netflix's stakeholders.
All right, you got it. Who owns the show, so to speak? It's definitely a landscape any potential investor should understand. So it turns out big institutional investors like Vanguard and BlackRock own a big chunk of Netflix shares.
Okay.
These are players with, serious influence over the company's decisions.
So why should we care about who owns Netflix? How does that affect us as potential investors?
Well, these institutional investors have a lot of voting power. They can influence major decisions, things like executive compensation, mergers, even content strategies. They basically have a seat at the table when it comes to shaping Netflix's future.
So they're kind of like the silent partners,
Yeah.
pulling strings behind the curtain.
Yeah, you could say that. But remember, Netflix has this surprisingly transparent approach to corporate governance.
Mm.
Their board members get deep access to the company's inner workings. They attend senior management meetings, have access to all the internal data. They really get a close-up view of how everything operates. And this level of openness is pretty rare for a company like this.
It's really interesting that they're so transparent. It sounds like they're trying to build trust and accountability. But is this radical transparency a strength or a weakness? Could it backfire on them?
That's a great question. On one hand, it might make them more vulnerable, to leaks or public criticism. But on the other hand, it could foster a culture of trust and collaboration, which could lead to better decision-making. It's a bold move for sure.
It definitely seems like a calculated risk.
Okay.
So these institutional investors are a major force. What makes Netflix an attractive investment?
Well, on the positive side, they're the dominant force in streaming entertainment with a huge global subscriber base. They have a proven business model, a strong leadership team, and a real knack for innovation. And their financial reports generally look good. Strong revenue growth and expanding profit margins. So there's a lot to like.
Those are some compelling arguments. But what about the cons? What are the potential downsides?
Well, their valuation is pretty high, which could limit their upside potential. Plus, they're facing intense competition. And that cost of content creation is only going to keep rising. And let's not forget their debt level. That's still a concern for some investors.
So it's a classic risk-reward situation. Investors need to weigh those pros and cons carefully and decide if they're comfortable with the level of risk.
Exactly. As a value investor, you need to figure out if the current price reflects the company's intrinsic value and their future growth prospects. There's no right or wrong answer here. It really depends on your personal investment philosophy and how much risk you're willing to take.
Okay, so we've laid out all the cards on the table. Now it's up to each investor to decide what's best for them.
Exactly. We've given you the insights and analysis, but the final decision is yours.
This has been a super informative deep dive. I feel like I have a much better understanding of Netflix now. And that concludes our deep dive into Netflix. We hope this episode has been helpful for your investment journey. Don't forget to subscribe to the deep dive for more in-depth analysis on the topics you care about.
And remember, this is for informational purposes only and not financial advice. Always do your own research and consult with a financial professional before making any investment decisions.
Until next time, keep learning, keep questioning, and keep diving deep.